Okay. So hi to everyone who's on here. Firstly, we want to thank you for joining us to our home buyers workshop. We will be also doing two more later on next month. If you're interested, you can visit us on our website, bronxchamber.org, or on our social medias, the new BXCC, Facebook, the Bronx Chamber of Commerce. So today we have two presenters. One is our first one will be Hope Coniglio, for licensed real estate broker of Hope Platinum Realty Inc. All of her information will be here displayed, but as well we will email everyone after the presentation is completed. So firstly, I want to welcome Hope.
Hi, how are you? Good afternoon, everyone. I just want to thank everyone for tuning in. And I also want to thank the Bronx Chamber of Commerce and TD Bank and loan officer Diana Janelle for having me. So we're going to go over the home buyer process. So there's three major steps to the home buying process. Okay, so the first one, which is the most important to get started, is you want to hire a realtor. Okay, you want to hire a realtor to represent you as a buyer's agent. Okay, that's the first step. Okay, then of course you're going to get pre-approved, right? And then you're going to find a home, right? So why hire a buyer's agent, and what is a buyer's agent? Well, a buyer's agent is a hired realtor who guides you through the buying process, okay, which is a buyer's agent. A buyer's agent represents and has a legal obligation, okay, to protect and work in your best interest, in your favor, to make sure that you get the best deal possible, right? And why hire one, right? Well, the seller has representation, and so should you. Okay. Also, your buyer's agent will have a team of professionals ready to assist you. At least most, well, all buyer agents should. So be wise in choosing the realtor to represent you as your buyer's agent. Okay. So they will have a team of attorney, inspector, of course, loan officer, and they will help you and guide you all the way through. Okay, so a buyer's agent has a fiduciary to you the same way that a seller's agent or a listing agent has to the seller. Okay, and they're pretty much the same. It's loyalty, disclosure, confidentiality, obedience, reasonable care and diligence, and accounting. Of course, loyalty, we have to be loyal to you, our clients, okay? Disclosure, we have to disclose everything and anything that we know pertaining to the deal, okay? That may affect the offer or anything, even defects of the home, etc. Confidentiality, a lot of people, they will refer, their mother, the brother, the friend. Of course, we have to have everything that's confidential, so everything will be confidential forever, okay, and nothing will be released to anyone that has to do with the deal. Obedience, we have to obey the law and the guidelines, and also what you guys require and want and ask, even if it's something that we think is not possible or the seller might not agree to, we are to do what you ask us to do and try to do it diligently, okay, which reasonable care and diligence. It's our duty to make sure that throughout the whole process we do our due diligence and we take care in everything throughout the process, whether it's flood insurance, homeowners insurance, certain things that you may want to know about the area or the house, etc. Accounting has a lot to do with finances. We don't take checks, accept checks, and put it in our accounts. our escrow, because that's what the attorneys do. But occasionally we might have to pick up the contract, drop off the down payment, maybe an application to like a condo, a complex of that sort. So once you hire your buyer's agent, they're going to go over all of your wants, your needs, everything that you want in a house, the area, the taxes, the school district, the transportation, etc. So once the offer is accepted, okay, and it's very important that you hire a good buyer's agent because it is important how you do present an offer. It's very important what you say, what you don't say, especially in today's market. It's very, very imperative. So once your offer is accepted, yay, we have an accepted offer. So now we're going to do an inspection, okay? An inspection is not required by law, but your buyer's agent and your attorney is going to require for you to do an inspection of the home to make sure that the home is safe and you are aware of the functions and how they work. So an engineer is the professional that will perform the inspection. And there's no house that's perfect. There's always things that is wrong with the home, but we're looking at the 5 major areas. Okay, so number 1, the roof. We don't want no leaks. The inspector might say, hey, the roof is about 10, 15 years old. That doesn't mean that the seller is going to change the roof. Of course, you can ask and they can say no, and that's fine. But we're looking for a roof that has no leaks. Okay, we're looking for plumbing system that has no leaks and doesn't have anything that is hazardous or not compliant. Okay, the electrical system. The house is not going to be coded to 2020 because it's not a new construction, but we want to make sure that it's safe, it's not hazardous, and you're not going to have a fire, and the electrical panel is up to par. Okay. Then we have termites. Termites, they look like little flying ants and they chew up the wood and they can really destruct the home. So if there's any evidence of termite, the bank is going to require that the home will be treated for termites, and the seller will have to do that. And at times the seller may refuse, and then that's your option if you want to move forward. So, but most of the time the seller will take care of it. And then last, we have the foundation. We don't want a house that's tilting like this, right? Occasionally you might have a problem with the foundation. Maybe there's something wrong with a beam, it has to be replaced. So those are the 5 major areas that we look for. Of course, there's other things that might have to be fixed and so forth, but those are the major ones. We want to make sure that you are safe, and we want to make sure that the bank will approve. Okay, and that comes with the appraisal, and that's in the next few steps. The inspector will also explain to you how the heating system works and the plumbing and the drains and so forth. So now we got through inspection, and just so you know, inspection is not refundable. They are independent contractors hired to inspect the home. So if something happens and the home is not safe and you do not feel comfortable moving forward with any of the items that were found, you cannot get your money back. But it doesn't happen often, but it does happen. Okay. So now we're ready to sign the contract. You hire your attorney, you retain the attorney. Okay. So you would pay him and her something up front, and then they will get paid the rest. Okay, you will sign the contract. You will sign the contract first with your down payment, and then it goes back to the seller to sign. Okay, once the contract is executed on both sides, it's ready to be sent to the loan officer, and your loan application will be started. You start your loan application. Once the loan application started, they will order an appraisal. So I just want to touch up a little bit on the appraisal. It is an inspection from an appraiser that is hired from the appraisal company, okay, that is hired from the bank. So the appraisers work for the appraisal company. So the appraisers do not work for the bank. I know that that's a misconception, but the bank has appraisal companies that they send the appraisal orders to, and then an appraiser will pick it up. So they will come, they will check out the house, they will take pictures. The main objective is to make sure that the house is worth what you're purchasing the house for. And of course, if they see something wrong with the plumbing or the electrical or anything, and sometimes the type of loan that you are applying for may require certain things. So they will also point that out as well. So the appraisal comes, it's done. Once the appraisal is done, usually you would get your commitment, which means that the bank approved your loan. Yay! So that's a happy step. You are officially approved, of course. There's more steps. Then they will order a title. Now, it's just like when you purchase a car and you run title. You want to make sure you have a clean title, right? It's the same thing with the home. So you have title insurance to make sure that you have a title that doesn't have no liens, no violations, and so forth. And they actually run both names. They run the buyers and they run the sellers, but most of the things that come up is on the title and the sellers, and they will have a chance to fix it or present the paperwork with any of the items that the title company is requesting. So they will clear the title, the bank will clear the title, right? And then we're at the end, then you just have to get your homeowner's insurance. You have to get your homeowner's insurance. The bank is not going to do a loan without you having the home insured. And then of course, the payment that you make to your bank, it goes into escrow, a portion, they renew your homeowner's insurance after, okay? And then you are clear to close. So that is pretty much the steps of what you will be taking as you purchase the home. Now, when we do go out and look for the home, of course, we're going to look for something that you want in the area that you want, the price range, the mortgage amount, everything that is to your liking. It's my job to make sure that the homes that we see are the homes that actually meet your needs. And sometimes you might look at a home and you didn't see the taxes, or it might not have like a finished basement. So that's my job to point those things out and just overlook everything. I will be the one that will be booking the appointments, submitting the offers, and I will be holding your hand and guiding you throughout the whole process. Some people think, oh, it's not, it can be very, very frustrating, but also very exciting. So I'm here for you. Buyers, they get, frustrated. They get upset, sometimes they yell. It's all normal because this is the first time. Sometimes it's the second time, sometimes it's the third time, but things always change in the market and the real estate industry. So as a professional, I'm aware of those changes. So whether this is the first time or your second or third time, I'm here to assist you and make the process as simple as possible. Okay, so we're going to go to the pre-approval section where Diana will take over.
Hello, Hope. Thank you. And thank you all for joining. This is the first step that you guys can take to you guys have more information about the process of buying a home. Can you guys see my screen good?
Yes.
So before I start the presentation, I do want to say one of the most important things. A lot of customers, they feel that they had to go to 5 different banks in order to get a pre-approval. You only need one person. For me, I see the mortgage like a marriage. You're going to get married, so you only need one person to say yes to you. So customer focus the most on the bank and say which bank I'm going to take first. So you just have to go to one bank that say yes. Once you have the pre-approval, then you go searching for the house, and then you come back to the bank to see at the moment that the time you're going to sign the contract to decide which bank you prefer. Because I had a customer first jump in conclusion and say, what's the interest rate that the bank is offering me? What are you guys offering me first? So the interest rate change depends on the market. So I think that the first thing the customer should go to the bank, get more information regarding purchasing a house like we're doing now, and then you start searching for the house. And then after that, you come back again to the bank and say, hey, I really got a house already, signed contract. What will be the next step? Because then other customer come to the bank and they like shopping around, like if they can get the rates compared with other banks. Well, we are a little bit different, but at the same time, we don't share too much differences because we do the same thing, almost all of us. The interest rate might change, might be a little bit, but it depends on the product that we offer. I'm gonna go and click and go to the next. So the process of buying a house, it can be very stressful. Again, I compare it like having a baby. For the time that you sign contract until you have a clear to close, it's like gonna be a stressful ride. You're gonna go in back and forth because the bank, they're gonna take you and ask you back and forth for information that you already provide already, but we still want to see it more. So the customer come, we're gonna ask for 2 months of pay stub, no, 1 month of pay stub, and you're gonna tell me, but I already gave it to you, but we're going to request it again because the bank wants to see the most recent information. So the step, it can be a little bit stressful, a moment. You guys hear me good? Yes. So the process could be a little bit more stressful, but if you got the right person to have that ride with you, it will not be so hard. The first thing you need to do is that try to get all the paperwork together because a lot of people go to the bank and they're not prepared. What I tell all the customer is that first run your credit yourself. Know your credit. Know your information before you provide it to anybody. Basically, when you go to the bank, we're going to ask you, what's your credit score? So if you know that you haven't checked your credit for a year, it's good for you to check before you go to the bank. Several products, the minimum credit score is 620. So if I go and I pull up your credit at the time that you go to the bank to get a pre-approval, what happened then? I'm going to lower your credit score. So now instead of helping you to move forward, now we're going backwards. So it's good for you to check yourself first and check your paperwork. You're going to ask yourself, okay, what's my income? What's my credit? So basically, you're asking the same question that you might think they're going to ask you. You're asking yourself. You don't have to be 100% of correct or all the information, but at least know your part of yourself. Know yourself of what's my income? How long I have been working in my job? So those information that we're going to ask you just to make sure that you qualify based on the income. Some of the stuff that we have is that we ask the borrower to take home buyer seminar so they can get more familiar with the process because sometimes it depends how they explain it. I can explain it to you 100 times, but you might not understand it the way I explain it. So it's good for you to get a little bit more familiar with your mortgage. Basically, after the closing, this will be your mortgage and your payment. So it'll be up to you to get educated as much as you can because basically this will be a bill that you will be in charge, not the bank. To get pre-qualified, you need 2 years of tax return. You need 2, 2 years of W-2 or 1099. Right now, through COVID, the 1099 or self-employed, we are a little bit risky because basically we're going up and down. We don't know exactly how's your income is doing. 1 month it can be good, the next month it can be affected. So basically what the bank want to see is that you be able to qualify and you'll be able to make that payment every month. So that's what we count there. Let's say you have 5 different jobs in 1 year. If you have a good explanation why, and it's a W-2, we take it. So that doesn't necessarily have to be 2 years in the same job. You can have multiple jobs, but at least you had to have a W-2 or an explanation why you was in the job. I was doing temporary. And a lot of stuff right now through COVID, it's taking an application with several different jobs. Why? Because if you have a contract, I have several customers that they have a contract since March and they lost their job. So what they were trying to do, they were trying to find a job so to continue able to have the house with them, the contract. The bank took it, even though they have 2 different jobs part-time at the moment. But what happened? Right now, we cannot be too picky. We had to help the customer the best we can, not saying no because you had two different jobs part-time and you don't have the old job that you used to have in your W-2. So we had to work with whatever we have in our hands. It's basically the explanation that you provide to us and how you present it to us. That's one thing. Find a realtor. For me, I think that some houses, I'm in the process of buying a house too. And one day I saw a house in Silo. And when I went to see the house, I was like, oh my God, what happened to this house? Like, whatever was in the picture, it was not what I saw. So it's good for you guys to get a realtor to help you in a way that you know that if they selling a house, it has to be a good property, it has to be good material because they need to sell it. So sometimes they advertise houses and you don't know the condition as well. And sometimes they do Photoshop and I don't know what they do to the house, but it make it look pretty. And then when you go see it, what you see is not what you're getting. So it's good for you to get a right realtor for you that work with you, that understand. And for me, I think ask as many questions as you want. Sorry, Hope. But I feel that if you're working with a person, they working for you. Basically, it's like you're gonna pay us to be helping you. So in a way, so if you have any question, it can be as silly as you think it is, but for you, it's important for us as well it is. So it's basically to have everything clear. For me, is that even if you're gonna charge me $1, it's good for you to explain to me what does the dollar stand for? What are you charging me the dollar for? At least I know that I understand all the process. Some customer come and say, I didn't understand that. That was not explained. So you want to be able to ask us a question as possible. Use Google. A lot of people use Google. So basically, it might not be that I'm gonna tell you everything that I know because it's a lot. And I don't want to just blow your mind and say, oh my God, like scare you off from the beginning. So it's good to do the homework, ask question. I suggest to the customer to write it down on a piece of note. That way, because when you're in front of somebody, they will forget all the question they have for that person. But if you write it down, you're gonna go like a checklist. Okay, so I have this question. Okay, that way all your question will be answered, and you feel more comfortable in the process. What happened if you don't ask that question? You're gonna be like blind. Okay, so I just did the loan. I don't know what happened. Okay, it didn't went, but what can you tell me about it? So it's good for you to be more informed, ask questions, and if they don't want the answer, move on and go get somebody else. Because we have a lot of people out here in the market, but the important person is you. And right now, this is your loan, so you should take care of yourself and ask the question. So getting the mortgage again is that once you have that mortgage, we're gonna go back again and we're going to ask you. We're gonna present to you the product that you qualify based on your income. Right. So based on your income, they're gonna show you the product that we have. So in a way that we're not gonna sell to you something that you might not benefit from, since you're a first-time home buyer, even if you're gonna buy a second home, it's always good to ask question again and to search about the product, which benefit me the most. It's always good to that person to show you different type of product that you'll be able to qualify. That way you make a decision and we present it to you. So again, if something go wrong, you can never say, I was not told, or it was you who chose to choose that decision for me. So we always leave it to the lender, to the person to take that decision, even though they have all the information in front of them. So it's always good for you to take that decision. Having a house, having a closing, and a move into your house. So again, the process is super stressful. Get ready for the ride. If you're really in it to buy the process, you really have to make yourself. You have to make yourself commitment. You have to work for that because nothing is easy in life, and the good stuff doesn't come easy. So you have to, now that you're taking the seminar, prepare yourself. What do I need to prepare? What do I need to do to continue going working with this mortgage? To either to qualify to get the loan. So to buy a house, they have a lot of things and they have a lot of bad things. To rent. So basically, if you're renting now, you're making somebody else richer. You're paying somebody else rent. It's not an investment for yourself. You're not using that as equity. So at the end of the day, you're gonna leave this world, God forbid, with nothing on your hands. But if you buy a house, right now you have grandkids, you have kids, you're gonna leave that up to them. Or you don't have to just that. You can use it as an equity in the future. In the way that right now you purchase a house, you start making payment, but you have to send your kids to college. What happened? Can I get a loan against my house? Yes, you can. You can use it as an equity. So if you notice it's like an investment for you and your family, it's something that you'll be able to own that property. And just the feeling of you saying, I own my house, this is my house, it's such a great feeling. It's just for you to just say that, like, I can do whatever I want in my house and stuff like that. When you're renting, you're making somebody else richer and it's not yours. So when it's time for you to leave, you leave with your empty hand with all your junk. Um, and then tax deduction. So when you buy a house, you can get tax deduction when you purchase a house. So when you do at the closing, you're gonna pay taxes to the county, but somehow the tax deduction, you file your taxes, you're gonna get some part of that back. So it's like, I know the closing costs can be a little bit expensive because of the taxes that we have to pay to the county and the city, but when you file taxes, you might get some money that back. Well, let's go back to the expensive. So now I live in an apartment and something broke. I had to call the office. They come fix it. Now you own a house. Now that means that, hey, you have to call a plumber. Now you have to start saving money because now if something got messed up, who's going to pay it? That means that I'm the owner of the house. I remember that part. So it's like, so you had to, now that you own a house, you have to save money now because in case something goes wrong, something breaks, you know that Diana don't know how to fix anything. I guess I have to call somebody, and they're not cheap. They always charge a lot of stuff. And plus, you have to get somebody that is certificate because you don't want to get somebody that messed up your planes, and now who you're gonna fight with because you're trying to get cheap and gonna get something cheap, and then at the end of the day, is your loss because now you have to get some professional, person professional, and it's cost more. So the freedom, you want to add something to it? Hope? No?
I'm agreeing with you.
So with the freedom is that when you own a house, we're going back again. Now you have more privacy. Now you don't have a close neighbor next to you that you can hear all the conversation because sometimes you can hear everything was going on next door. So now you have more personal choice that you can do barbecue. So for me, I think that customers feel that because they're here in the street, oh, you know, Diana, I'm not qualified to buy a house, but who say no? There's always a place for somebody. All depends your income and what's your expense. And if you know how to manage yourself, don't don't jump to something that hey, I want to buy a 400,000 if you qualify for 100,000. So get the 100,000 now. Why are you gonna wait until you get a better job, until you have more saving? What happened if that thing doesn't come? What happened if you stuck in your job for 4 years? So that means that you was projecting something different, but you still stuck in the same place. And to feel that when is the right time to do it, it's like when you have kids. You never feel 100% sure if you're ready or not. Once you go to the bank and you get the right person, people be like, did I really qualify for $20,000, $30,000? Yes, it all depends what you're looking to buy. You're not going to buy a 1 million house, but you're going to buy something that's going to be yours, something that is an investment for yourself and that you're building equity. Do
Yes.
you guys have any questions? No?
I just wanted to add something. I find that there's a lot of people that assume they think that they have to have a specific credit score, have a specific amount of money, make a specific amount of income. And I always encourage people just come speak with us. I have people all the time that they come and they speak with me, they speak with the loan officer, and they find out that they can qualify and they don't need as much as the money that they thought that they needed or thought they had to make the income or even the credit score. So it's best to come and find out, as Diana said.
Yes. So looking through the lender's eyes. So the bank again want to make sure that you be able to afford this house. I always say to a person, they say, oh, I don't qualify. Can I get a co-signer? Of course you can get a co-signer. But what happened when I could tell the customer, that co-signer might not live with you or might help you pay the bill. So you want to get something that you really can afford on your own. In case something happened, let's say you're doing it with your boyfriend, and in case you break up with the boyfriend, you can still qualify and make that payment on your own. Because now what? Now you're gonna make a $2,000, $3,000 payment that you can afford. Now you add him to the loan, but now the relationship is over. So it's always good to know how much you can qualify on your own. And if you know that for sure you want to do with a brother or a family member, okay, let's do a co-signer. But it's always good first to find out first how much you qualify, and then you can go for a co-signer in case you need it. So what we look is as well a good credit, but the minimum is 620. So it's not that excellent, but at the same time, you don't need a 700 to get a house. You can get a 620, a steady income in a way that you have 2 years. But again, due to COVID, a lot of changes have been happening. So some stuff we making some exemptions, some customer. Let's say for example, a customer make an annual income of 60,000. The mortgage amount they can qualify is 180. But again, this is more on the expense. This is more how much you pay monthly on your credit cards and stuff like that. So it's good for you to always ask the bank how much you qualify and to run your credit for you to be sure. What I try to do sometimes is not run 100% the credit on the customer in this way that I want you to show me all your bills. I want you to open your credit card, your Chase account, and see what's the minimum payment that you are there. In case you don't need to pull up your credit, why are you gonna do it if there's no need? At least you know your credit and you know how much you pay a monthly. And if you say, you know what, my credit 700, here's the FICO, you can show me. Not by Credit Karma, because Credit Karma is free. So nothing that is free is legit.
Exactly.
So it is good, but at the same time, the numbers are a little bit off, like 10 to 15 points off. So when you think it's good, 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 and then when we put it, what happened? It's 720, and then when you put it, it was 680. Basically, it's a little bit different. So while we look into a customer is four things. We look at the credit, at least 620, and we look at cash. A lot of customers, they so used to having cash at home or someplace hiding, not in the bank because they feel that they don't trust the bank. So when you do a mortgage, you definitely need to have at least 2 months collecting dust in the bank, just to show you. Because again, we're going to ask you for 2 months of bank statement, and we're going to ask you where the money came from. Let's say you receive a gift from a family member or somebody, and we want to see where the money came from. We want to see their bank account just to make sure that it was a check, not cash, and that they have the money there at least for 2 months. So it's basically to prepare yourself. If you have money at home, try to put it in the bank as soon as possible because, again, you are planning to buy a house. This is not the old time that we can go to the bank and say, hey, here's $20,000 or $40,000. So we had to pay ourselves in case you need that cash for purchase a house. And capacity. So basically, we want to make sure that everything that you do through the process of the bank, it will be legit because some customers feel that my credit's not that bad, but let me get somebody else who do it for me. And then problems come back and forth. The customer want to make sure that you qualify based on credit score. That would be the first thing. Based on income that you qualify and how steady your job is. Basically, when we check your credit, we actually really look at it. I didn't notice that. But underwriters, they really have an eye on it. And they ask every little thing that what you do in your credit. They basically ask you. And they say, hey, we noticed that you stopped paying this credit card for this amount. Can you explain to us why? So it's always good to manage your credit and to run your credit. As I work in the bank and I like to run my credit at least, a credit report at least once a year. And I check it every month just to make sure that everything is in there belongs to me, not to somebody else. So it's good to be on top of your finance, on top of your credit. And then if you have any question, go to the bank and ask any question. And I went through a few things for this. So we actually check for your credit, if you pay your credit bills on time, how long have you been renting? And sometimes if the person does have a short time renting, we're gonna ask like a letter from the landlord saying like if that person have been paying on time, because we will not be able to have that information. We check for your charge off. Before, a lot of banks, they were telling the customer that if you have a charge off, you have to pay it. But now I guess they make an exemption, so they're not asking the customer to charge us to pay it. So in a way, it's good. That way, that if you owe when you're back and you know you didn't do too good financial, you need to pay $4,000 besides the closing costs because the bank is requesting you to pay a charge off account that happened years ago. So the way it's helping the customer because before it was causing a lot of problems. The banks are doing that. And if you have any judgment against you, the banks want to know your whole life. Why? They are lending you money, and it's not 20 or $10,000. They lending you a big amount, and they want to make sure that they lending it to the right person who is responsible. Because again, what it speak for you is the credit report. So the way you treat it, some people don't treat it well, but you're gonna be judged by that. You're gonna be judged what you did in the past that you're trying to buy a house now. But that doesn't stop you for doing buying a house as well. So again, we talk about the cash, about the deal. See, I cover everything all at once, and then I noticed that it's there. So the gift, so down payment had to be on your account. Let's say you're buying a house with two-person, or let's say a wife and a husband, and the husband's not gonna be on the loan, but you are, and he have all the cash for you. So he had to give you a check, no cash at all, and you have to deposit into your account. Let's say you make $2,000, but you deposit $3,000 on your account. So the bank is gonna ask you, hey, you only make $2,000 a month. Where you gonna get that $3,000 from? So now we got explanation. Why did you deposit that cash and where did it came from? And other customers, they feel upset because why the bank had to ask for that question? We need to know every penny that goes to that account that is going to be related to this loan, because everything has to be legit. And it's not because the customer is doing something bad, but everything had to be clean money. In other words, not to make it sound bad, right? Employment. So again, you have to have a good history. Let's say, for example, if 5 years you keep changing job, part-time, back and forth, then we have to think about you, because I know that COVID, lay off a couple of customers. Or let's say you're a teacher and you'll be going back and forth to different school. You can explain that. Or you can explain that you work for an agency and that's why you have different type of W-2, because other customers have W-2 and they different. So it's basically, again, what can you explain to the bank? And again, customer who receive Social Security and disability, they are able to qualify to buy a house. A lot of people feel, oh, I'm not working. Right now I'm getting Social Security or disability. Yes, you qualify. Don't say no to yourself. Don't be the person who stop yourself just for you not knowing the right information, stopping you to buy the house. First, ask the question. Go to the bank. They can be nonsense, but at the same time, what is nonsense for you, it can be very important because that can determine whether you qualify or you don't on the mortgage. So again, the home buying class is good for you to prepare yourself, get information about the home mortgage, get the inspection. A lot of people feel that they don't need to get an inspection because the house look nice. But again, Diana doesn't know anything about the house. And what you see sometimes is not what it is from the inside. So let the expert do that for you. Even though it's gonna cost you a couple of dollars, but at the same time, everybody's looking for the best interest of yourself, and the bank as well is looking for the best interest of the bank as well, because they're the one, in case you stop paying, they're the one who's gonna take the house from you. So pre-qualification, how much you want to borrow. So basically, let's say I qualify for 400,000, but I only want to get a house for 200,000. So you say, hey, Diana, you know what? I know the bank qualified me for this amount, but I only want to pay this amount. Don't let nobody, because, oh, you should get a house for 500,000 because you qualified for that. No, what you're gonna get, you're gonna have to, you feel comfortable, that you feel that, hey, I'll be able to make barbecues, because some people, they get houses and they can't make a barbecue in the summer because they're so tied up with all the bills. Because believe it or not, now that Diana own a house, I guess I had to pay for the water, for electricity, a little bit more expensive. So everything is on the person who purchased the house. So it's the way you manage your money and then really how much you can afford it. Um, when you say I want to buy a house for 200,000, what the payment looks like, because you want to get that image of projection. Hey, I'll be able to make that $3,000 payment or $2,000 payment a month, because sometimes you feel, yeah, I can afford a house, but then when you see the taxes, the insurance, like Hope said, some taxes can be high. I closed a deal yesterday. I did a mortgage for a customer, and the taxes was $12,000. I say, do you saw the taxes on this house? Like, yeah, but the houses was good. You know what? You leave it to the customer because it's up to them. But that will add up, because they're saying The bank can tell you the mortgage payment is going to be 1,000, but now you're going to add up $500 of taxes. Now you're going to add up for the insurance. And if you don't put the 20% down in certain mortgage, we're going to ask you for that PMI, which is private mortgage insurance. We do have some products that you don't have to pay the PMI and you can put a low down payment. But when you go to the bank, you can discuss that information with the bank. House hunting, work with the realtor until sign the contract. Um, I think that sometimes you explain to the realtor what are you looking for, and they might show you different of what are you looking for, but sometimes they're looking outside the picture because they might be seeing and looking for a house that it might be better for you because some customer they focus more on what they want or than what they need. And that's like the main major thing. Like, hey, I'm just focusing on myself. Oh, that house looks so beautiful, but how much it costs? Oh, the house this. So basically, if the realtor suggests something for you that, hey, Diana, maybe you should look at this house, it's because might be the one that you might need, not the one that you're looking for. It might not be the prettiest one, but when you go inside, because some houses they look kind of not too pretty from the outside, but when you walk in, it's like, oh my God, like what happened to this house on the inside? I have seen some houses like that, and you'd be like, wait, but they don't did the outside, just the inside. So basically, is that you have to just look around and don't, in a way that don't stick with one property only and say, hey, I only want to go to Yonkers, I only want to go to the Bronx. Don't limit yourself. Look around, look different houses, because that way you'll be able to find the right house for you. At the beginning, the first house, you're gonna fall in love with it because that'll be the first house you see. That's exactly what I need. I need a bigger kitchen. But then you go to the next house, you're gonna see the same thing as the first one. You're like, okay, you know what? I guess that thing's a little bit more different. It's not just the first house that I'm gonna see. So on the mortgage application, you need to show proof of income and saving. Again, with your down payment, your cash has to be in there, and the debt. So if you're planning to buy a mortgage, planning to buy a house, it's good for you to try to reduce your debt. If you have a credit card, focus not to buy anything. Focus on your goal, not to spending, more to saving. In a way that right now I'm focused on this. I'm focused on buying a house. And you know what? If I need to buy that shirt, that can wait for later because right now I'm focusing on my house. I have a few questions. There's a few questions, right? Dolores, no?
Okay, so one question is, can I change jobs in between?
Yes. Nothing can stop you. Let's say, for example, you got laid off or you need to change your job. Hey, what you should do, go for it. The bank is not going to say no because you changed your job. You have to do what is best for you first and focus on that first. And if as while you give an explanation, why you change job, hey, because the bank is going to notice you might get more money, you might get better hours. So with a good explanation, is good.
I know another question was how to sell a home and buy another property.
So they want to buy a house and then buy another property.
They want to sell a home that I guess they already have and then to buy another property.
Oh, you can
Yes.
you explain that part?
Well, if you need to sell in order to purchase, then that's fine as well. I also sell homes, so I can list and I also can represent you in purchasing a new home. So the best way to do it is that you have to put your home on the market, because a lot of times if you go look for a property and we have to disclose, there's the word disclose, we have to disclose that you have to sell in order to purchase. So it's good to have at least an accepted offer. Better yet, go into contract before we start looking. So it's kind of like you do both deals at the same time. Now, if you don't have to sell to purchase, we can still do it at the same time, but at least buying is not contingent on the selling. But yes, we can do both.
And what the bank can do as well is that you're going to communicate with the bank that you're in the process of selling a house, and the bank will know that the cash that you're going to receive, you're going to receive it for that selling. Again, you have to show paperwork that you sold the house, and that's why you receive this cash.
One question was, will this presentation be emailed to us post session? Yes, it will. Everybody will get a copy, as well as everybody's information, contact information, if you wish to email Hope or Diana, or even give them a call on any questions that you feel like you just want to ask them instead of going and commenting or chatting in the chat. That's perfectly fine too. Diana, are you done?
No, not yet. Are you good with the question?
Yes, the
There's no
question.
more question?
No, there's no more.
So relieving a loan decision. So you're gonna get from the bank once the bank have reviewed all your paperwork, because sometimes what you say is not what you get. And some people say, "Hey, I make $50,000," and then when we check your paperwork, you only claim $20,000. So especially when you're self-employed, you claim one thing, and then on the bottom where it says total taxable income, that's what we go by. So that a customer get a little bit confused. So it's always good to check the paperwork. Let the bank check the paperwork. Once you submit the application, the bank will ask you everything that you say in the application. I want your job phone number to verify that you work there. I want to see all your W-2s, your tax return, your pay stub. Now we're gonna get you an approval saying to you, we're moving forward with your loan. So it's basically you're getting more near to the end, because now the bank say to you, after we check all your paperwork, you still approve. So that's a good feeling, like, oh, thank God. Because before that, you get a little bit suspense. So for the denial, let's say, for example, we check something that you didn't disclose in the application, because a lot of customer, again, doesn't disclose everything. They feel that because you didn't ask me, I didn't say no. So it's always good for you to find out first, because what we do is that we pull up credit at the beginning of that application, which is a hard pull. And then before closing, we do a soft pull just to check that you didn't went crazy and for a refrigerator before having a house. Because think about the bank denied the loan and you still don't have a house. What you gonna do with all the stuff that you purchased for the house? So it's always good to wait to shop after you buy a house. And as well, let's say you was working for this company and guess what? They gave you layoff. But you thought that the bank was not gonna find out because you already showed them pay stuff and they have everything on record. But guess what? Before we do the closing, we call your job and we verify you're still in good standing. Say, we ask them again if you're still in good standing in a way that you haven't given 2 weeks notice or that you're going to be laid off. So it's always good to disclose that. In the event that happen, that it will make you your loan application. Because once you change the application, you should disclose it with your loan officer and say, hey, Diana, you know what? I actually changed a job, or my hours of work is less hours now. Instead of 40 hours, I'm only doing 20 hours. Tell me that. I need to know everything that was in the application that we put in. It had to remain the same. And if there's something changed, communication is the key. In that event that something goes wrong, the bank is going to provide a deny explanation letter, letting you know why you was denied. The good thing and the bad thing is that with that deny letter, you can get your deposit that you provide to the house, you can get it back. That way that it's not telling the seller that you're the one withdrawing your application or the contract or you breaking the contract. It means that for some reason you was not able to qualify for the loan. Things happen. Hey, we had to move on. The good thing is that you're still gonna get your money back, the one that you put for your deposit. So the different type of products that we have, I cannot talk too much in deep of the product, but we got the fixed rate. The rate that right now I locked it in yesterday for 2.5. I know, right? That was good. For me, that those numbers are records. So we
It
locked
is.
it for 2.5 and it was for 30 years. Imagine you being with that marriage for 2.5. So it's a good thing. Another thing I want to go back to is that a lot of customers, they always want to focus on giving a lot for down payment. I feel that not giving too much, it does help the customer as well, because they say you give $50,000 or 20% down on a mortgage. And what happened is that you're going to lock it for 30 years. But what happened if you give less than that? And every month you're going to be making extra payment towards the principal. So you're actually killing life of the loan. So at the beginning, when you give that 20% down, you're going to be stuck there for 20,000 for 20, 30 years with that 20% down payment, paying the same interest rate. But every month, if you give extra amount to the principal, you're going to see the difference. You're actually killing the life of the loan and your payment is going to be less, even though the interest rate will remain the same. But the more you pay to the principal, the better it is for you. We also have adjustable rate that after 10, arm 10 to 5 is 5, 10. The interest rate, whatever is in the market, that's the interest rate you're gonna get. But that's good if you say, hey, I'm only buying this house, but 7 years from now I'm gonna get married and I'm gonna have kids and I'm gonna buy another house. So basically it's that you get a nice interest rate, but think about it that when 10 years pass, if the market went hard and it went more higher, that means that you're gonna be stuck with that interest rate. So the fixed rate is the better option if you're not trying to sell. We also got the government loans. We got the FHA. The FHA, I think it will keep you going. It will get you a loan. But for me, I think that because the FHA charges you for front end mortgage private insurance. But if you think about it, oh, I'm only waiting for the 20% because I cannot make it. You're gonna be stuck for a long time. You know how much you're gonna be waiting there to make 20% for a house. So sometimes that will be the best option that you have because right now at least you're not making nobody else richer. You're paying that mortgage yourself. And then what you can do is then once you make the 20% down, you can either refinance that loan to try to come out for that loan and the PMI will come out. But think about it, you already have 10 to 15 years paying already for that house that is yours. It was not the best loan you could get, but at least it's yours. And you make it, it's an investment for yourself. We can also have BA loan. The BA loan is for veteran. It basically is no credit. It's something very better that because they don't have to put a down payment and they don't have to have credit. So it's good. It's very flexible for them. Affordable loans that we have is the right step. Down one at least, it will help the customer with no PMI, no mortgage, private insurance, and it will allow the customer to put as low as 3.5 as well with the FHA. But for that one, you have to qualify based on your income. Basically, it's if you're low moderate income, you'll be able to qualify in your first time home buyer. The rural development, that one is almost sometimes 100% that the bank will pay for it. But it has to be the property has to be structured that way, and you also have to go through a few things. The down payment assistance program that's allowed the customer to get grants for different type of community centers. They're going to help them to get closing cost assistance that will help you in a way that if you don't have all that cash, it will help you for that purpose. So the cheaper will be for you, the better it is. So the seller and the buyer come together to make sure that all provision and contract have meet, right? After that, you will own your house. And that'll be the best feeling. And they'll be like, Diana, when I buy the house, I'm going to call you and I'm going to, yeah, right. You will forget because you'll be so happy and try to fix the house and making parties that you will forget the whole mortgage process and experience and the stress that you have. So again, after you have a house, it's always good to save money because now you are the landlord. You are the one that have to pay all the bills. And again, I didn't put there, but we do have different type of property. So co-op more, you will become a stockholder. When you become a cups holder, that means that you're not able to do a lot of things that you want to do. You will not be able to do construction, to move things around. You had to ask permission. For condo, basically you're more flexible. You own that property. But again, it felt like you own an apartment as well. So you don't have too much flexibility. When you buy a house as well, now you have one unit property house that one family fit. We also have the 2 unit family house. So what the bank can do is that, hey, I want to buy a house that in a 2 unit family house, but I don't think I can afford it. So what the bank would do, they will add up the rental income for the second unit to make you qualify based on the rental appraisal, how much they say that I will qualify based on the rental income. So never put yourself a limit. Never say no, I cannot qualify. You can qualify. You just have to get the expert say no to you and don't say no to yourself before you know. And that's it. Thank you so much for everything. And I hope I didn't talk that much. Dolores, what happened to you? So if you, now she's back now.
I'm here. I'm sorry. So if anybody has any questions, which I see no questions, but if you feel like you have any questions and you just don't want to add it in the chat, you can always give us an email at helpdesk@bronxchamber.org, or you can reach one of the girls, one of the young ladies. I added the information on the group chat, on the chat at the side. I'm also going to follow up with an email. But I want to thank everybody who has participated in today's webinar. It's greatly appreciated and very informative because I've learned some things or two myself. So thank you again. And we hope to see you in the next one. Thank you.
Thank you. Bye.
Thank you. Bye.
Thank you.